And we are live. It's been a while, so let's get started with the intro, and then we're gonna hit the macro, the markets, the technicals, what's going on with inflation. Let's go. All right, so let's get started. Hey, look, go to YouTube, TikTok if you want to see the charts. I'm gonna go ahead and flip it over, let you know where we're at in the business cycle. And what's going on in the markets, right? What is going on in the markets. YouTube, I'm gonna scale this down a bit. We got some slides to go over, some information that we want to hit. Okay, so first off, let's do the technicals real quick. Looks like we're starting to break down on the trend. Obviously, this was the uptrend from the beginning of the year. S&P 500, where most of the stocks are, the basket of all the biggest 500 companies in the market. And now we're starting to get a break of trend. We are supporting to some degree anchored VWAP, okay, anchored VWAP. But my guess is, let me know how the volume is. Let me make sure on the comments it's not bad. YouTube, where it's at. Yep, 100%. What up, Doifer? Okay, let me know if my voice, if there's always something wrong technically. Let me know if that's working. All right. So, anyways, back to the technicals, right? We're holding anchored VWAP from about 2 pullbacks ago, or you could say 3, but we're holding anchor VWAP from February, right? Now, my guess is, and I've been waiting, I thought we're gonna have the correction back in March. It didn't happen. Now it looks like we should be correcting. Inflation, the numbers were hot. They were hotter than expected. I don't think it's as bad as most people are, making it out to be. The market isn't freaking out too bad yet, right? But I think forward-looking inflation is actually more positive, but we can't, because we're looking at CPI, which is lagging inflation. So let me get through this. First of all, okay, I'm expecting about a 3% pullback. Let's check where we're at today. Actually, I'm gonna go to SPX, but this is SPY. We're holding anchor VWAP. I think we kind of got rejected this morning. We're down 2.3%. I think at most we come down to 3.5. Maybe we go to 5%. Maybe we continue lower. We come back to this support down here. But I want to make something clear. Actually, let me check my slides, make sure this is not part of it. First of all, April is weak. So the reason I have this up, why am I buying the dip in April? Or should you buy the dip in April? Well, historically, April has been weak. YouTube, you guys can see this. This is the data. April's performance past 3 years. You're not going to be able to see this on TikTok, but April's performance last 3 years is typically negative, right? September is the other negative month, which means I think the bottom is going to be somewhere around April, May, where we have a weaker economy, where inflation starts to cool off again. That's my guess. Okay, have that on my that's going to be on Twitter or X if you want to check out that chart again, or you can just ask me to show it again. So I think we're basically going to see a turnaround sometime in April or May by the dip, right? Whatever that is. Now let's go back in time, because it looks like the first quarter was very strong. Okay, this is a 3% pullback. If we do get it, we're looking at a 3% correction down here to 5,093, whatever, right? 510 on the S&P. Actually, I'm sorry. Let me go ahead and go live on Instagram. I totally forgot. Forgot to push that button. Too many buttons here to push. All right, Instagram, we are a little late. Go ahead and jump on the YouTube video if you want to see what we're looking at. Anyways, 5% correction is going to be, let's see where that 5% correction is. This is what Tom Lee's calling for, about a 5% correction, maybe down to 5,000, right? Now, what's going to cause us to get down there? Is it going to be inflation reaccelerating? Well, if we get another hot print like we just did, yes, for sure. We're going to look at inflation, but I think it's not going to be that bad, because forward-looking inflation isn't as scary as people put it out to be, or as the CPI looks, because it is lagging information. But if we just were to look at S&P trend, right, versus the past, let's go back to, because we're looking at fiscal dominance here. Fiscal dominance as in a lot of government spending, driving earnings, driving profits, right? Profit margins are actually picking up. Profits are picking up also. We're going to get to that data. But I just want to show you, if we go back to 2017 was the last time we had fiscal dominance. We had tax cuts. And the biggest, this is the entire year, by the way. This is 2017. So the whole year, the entire year of 2017, right? We basically had a couple 2.5%, 3% corrections. So it's not abnormal. We don't need a 5% correction. Okay. Were the dynamics a little different? Yeah. The, interest rates, everything was a little different, but this is normal. We had an upside move. And so far, all we've had is, I think, 2.5, 3% corrections at the most. Actually, I think it's only been 2%. So that's one example of an entire year of climbing higher. We go back to the 1995, which I think is more closer to what we're seeing because we're seeing innovation take place. We're seeing, high rates around 5%. And if you go back to 95, same thing. You had, at the most 3.4% correction. So you can have a year where we just go vertical almost the entire year, right? That's what we're looking at here. I'm going to have some timestamps in here also. If you want to see once we hit the data, I'm going to have some timestamps on the YouTube. So go check that on YouTube. Let me see if we got any comments before we roll through the data, the macro data. No rate cuts this year, way off the table. I think we do get a rate cut. I think we get a rate cut this table. I think rate cuts are being pushed back to July at the moment. The June cut got pushed back, but we have evidence that this might actually change. So just keep this in mind. First quarter was strong. Second quarter, heading into the second quarter, we are starting to weaken. And I think I'm going to target about a 3% correction here. Could it get worse? Sure. We'll see how the data looks. But so far, Q2 going to be, a little weaker, possibly. I don't know. It looks bearish to me. I don't know about you. It looks pretty bearish to me. Let's go back to S&P. We're just doing a little technical analysis. And look, the RSI has been signaling bearish divergence for a while. It's been falling, right? Buying pressure is slowing down. Price was going higher. At some point, we were going to get a correction. And the question is, once we get below this level, what is this on SPY? Let's keep it simple. Below 513. All right, which we get PPI tomorrow. If it looks bad, we probably go lower. I think we pull back. I think we come down maybe to 510. I don't know. This is a pretty strong market. Now, the reason I say I'm buying the dip, the reason I say is it a buy the dip opportunity is because underneath the hood, the macro is still very strong. Your only issue is inflation, and we're going to go over that right now. If you are on TikTok, jump over to YouTube if you want to see these charts. I'm not going to show them on here, but I will try to speak through them using my great language. No, I'm just kidding. I'm going to try to speak through them. But if you want to see the actual data of inflation, right, all the leading and lagging indicators to inflation, jump over to YouTube. I'm going to have the charts on there. Otherwise, I'm just going to talk through it, and I'm going to leave us. I'm going to leave us on S&P. All right, I'm going to leave us on S&P. We will talk about the commodities slowing down or speeding up also, right? All right, so comments on YouTube really quick. Let's go through these. I made it. What up, Veronica Martinez? StreamYard, don't give me no issues here. Come on. All right, so we're going to go through this. We did get a hot CPI print. 3.5 was the worst case scenario. I was like, man, if we get 3.5, we're going to have a pullback. Actually, it wasn't as bad as I thought. But we still have the rest of the week. We still got 2 more days. We got Wednesday, Thursday. I'm sorry, we got Thursday and Friday. We got PPI, producer prices, what the corporations are paying on the manufacturing and on the service side of the economy. What are they paying? Okay, if they're not too bad, I don't think we're going to get a massive correction, but I still think April is the year. Now, or is the month. Why do I think April more so? Because of tax. Because of tax selling, right? There's a lot of people who made a lot of money in the S&P, mostly baby boomers, whoever had fixed income, they're going to collect, right? They're going to cash in. They're going to take profits and they're going to have to pay taxes on those profits. So I think it's going to be a tax sell-off. That's my guess. We're looking at a tax sell-off correction in April with, you can also throw in there higher CPI, higher than expected CPI. Now, what we do see happening is that margin balances. This is our first slide. TikTok, this is our first slide here. Margin leverage, and I actually put this on the videos, is rising. Margin leverage is rising. So investors overall, whoever they are, institutional retailer are now increasing margin or increasing debt. They are not now positioning higher into the market. I don't want to say higher. They're positioning themselves. They're saying, hey, look, the prospects going forward look really good. So let's lever up. So leverage is rising. That is very bullish for stock markets. Cash is coming in. People are borrowing to leverage in the markets. Why is that? Well, I think primarily one of the reasons because next slide, corporate profits after tax are starting to re-accelerate. Okay, corporate profits are reaccelerating. Last time we got a reacceleration was 2020. Now corporate profits are rising again, very bullish. That means earnings are going to be higher. So what could be causing corporate profits to be rising? Right now, remember the stock market is front running or is leading the economy. So this is not necessarily the economy you live in your little city. These are the best companies in the world. These are the growth drivers of the market of the corporate industry. So profits are rising. Why is that? Well, one reason I think is, should we go to liquidity? No, let's do liquidity last, is margin expansion. The cost of labor is falling. And yes, immigration has been driving most of the new jobs. Okay. And people get pissed about this, but immigration, whether legal or not, is lowering labor costs because there's more people in the market. There's more to choose from. So labor costs, the cost of labor for corporations is falling. For businesses is falling. Lots of construction happening, lots of new builds for chip manufacturers, right? To build chips for AI, to build whatever it is, new houses, complexes, that is rising. So cost of labor is falling. Well, that increases your profits because if you pay less, then you increase your profit margins. Okay. Also, productive output is rising, or each person who works per hour is producing more. So you're producing more things at a lower cost. Very bullish, which is why profit margins, I think, in the macro are rising. There could be other reasons, but and then we have 5% interest rate. So you think that wouldn't happen, but it is, because also the big companies, Apple, Amazon, Google, Facebook, we have what, $7 trillion companies now. Guess what? Their cash is yielding them more than their debt. So there's still monsters in the market, right? And we're not talking about stock picking yet. We'll get to the technicals, but we just want to go over the macro. Leverage is picking up, profit margins are rising, and the king, liquidity is king. Liquidity is starting to pick up. You guys, if you're missing it, we're over here. I'll tell you what stocks, ask me again. I'll tell you what stocks I'm looking at or what sectors, but liquidity is rising. Okay. Liquidity only goes higher. What is liquidity? Money supply, whatever you want to call it, collateral into the system, credit, global credit, whatever it is. Money supply, global credit is picking up because Europe is coming out of recession. China's coming out of recession. Japan's a little wonky. They're a little different. They actually raised rates, and the US was in a recession, hasn't been called yet, but it is picking up. So liquidity is picking up, and that is the biggest driver to riskier assets, which is why we see gold going higher. Yes, energy is going to be good. I'm actually looking at some energy stuff. I will get to that. Save those comments for app once we're done with this. Okay. So liquidity is picking up. Bitcoin's going higher, gold's going higher, right? Risk assets are going higher. Now, inflation is still one of the big issues here, but again, productive growth of productivity picks up. Then what it does is it stalls inflation pressures because it costs less. So costs are actually down and you're growing more. So it's disinflationary to some degree. Okay, now if we go back to 1995, when you get real output or productivity growth rising, okay, this was 1994 through 1998, you had one of the biggest stock market rallies of all time. The only time the market grew faster from 94 to 2000 was the roaring 20s from 1921 to 1929. And I know there's a big crash following that. We're not at that level yet. Like, we just got started. We just broke all-time highs. Don't get too over your skis. We're just getting started here. Okay. So, when productive output, whenever you produce more, there's more GDP. When your cost of producing more is falling, that's more GDP. That is more profit. That is more margins, and investors start to invest more because they earn more. So this is very bullish for markets, period. Now let's go to CPI. Let's go ahead and jump to CPI. Where's first thing I want to make clear here, okay? CPI is a lagging indicator. Keep that in mind. CPI is a lagging indicator. TikTok, jump over to YouTube if you want to see the charts, because I'm showing all these charts, or you could just go back on YouTube later. I will post these on my channel, these charts. So you'll see them eventually. You could just listen now. All right, so supply chain service prices lead CPI. You can clearly see that they lead, right? They are the leader, as in supply chain prices get passed on to the consumer. So these are leads and lags, something, in the macro, they don't really say too much of, but you want to learn this. You want to know what's leading so you're not misled by the information. CPI is lagging. You can see clearly at the end, all the way to the right, that supply chain service prices are falling, right? They had a big upside fake out, and then they, now they're back to the lowest they've been since what? The pandemic? Yeah, prices are falling. Producer prices are falling. Or in other words, supply chain services prices. So these are businesses that produce services. their prices are falling. And remember, in the US at least, services are 70% of the economy. Okay, 70% of the economy. So those prices are coming down, which, and this is, forward looking data. So I expect the CPI to come down. We'll get to the next CPI print. Okay. The business cycle is that's not what I wanted to look at. Okay, I messed that up. We'll come back to this. Well, for the most part, okay, let's just talk about this, right? Forget the producer prices or the supply chain prices. That's going to be after this. Really, what I want to get at here is that business cycle momentum is picking up. ISM manufacturing, and this is the leading indicator, right? Employment, supply chains, delivery times. If you want to look at all businesses, ISM prices for the US or ISM manufacturing index is the leading business cycle indicator. What is the business cycle? It's when the economy expands and then when it contracts. And it's barely starting to, expand. It's getting pretty, it's going higher because productivity growth, liquidity is coming in, profit margins are rising, leverage is picking up. The business cycle is just getting started. Our biggest issue here is definitely inflation. Okay, it's definitely inflation. Prices are a bit coming down. Yeah, prices are coming down. We'll go numbers. Listen, I'm gonna tell you guys this right now. Get your politics out of your finance, right? It's irrelevant. Yes, fiscal policy does matter, but you can't be blinded by politics or you're gonna make the wrong moves. Okay, you have to recognize the data. And if you don't believe any data, well, I don't know what you're looking at, a crystal ball. So, anyways, let's get started. Let's keep going here. Business cycle momentum picking up because of all those things. Now we just got to worry about we got to worry about supply chain prices. And this was a fake out. This is what we're looking at. This is in purple. We have core CPI. It's sticky. Yeah, it's a little sticky. Okay. In black is headline. Headline is literally energy and food prices. They look to be reaccelerating. I said this about a month ago or 2 months ago. I said if we get to 3.5, then we can classify this as a reacceleration of inflation. And it looks like that's what we're actually seeing here, a reacceleration. But I'm not so sure because the leading indicator, the ISM prices, which are supply chain prices, those are falling. Okay, those are simply falling. So I'm not too worried about that because the lead of prices is falling. Now, why might that be? Well, let's take a look back. Remember we had the Red Sea conflict. Okay, global shipping prices exploded. That's what caused the supply chain backups, right? Delivery times had to slow down. So the transportation costs increase. This strained the entire supply chain, and inflation went higher. Prices went up because you had to pay more for defense to protect your transportation of goods, and you had to pay more for just shipping in general. So those spiked, but look at the trend; it is now coming down. Right now, that spike is barely coming and feeding into our consumer prices. So again, going back to the lag, if we go back to the lag and we look at global supply chain pressures, okay, that's in purple now. We're looking at leading and lagging indicators. Okay, if we look at global supply chain pressure index, did I have a single one? I didn't think I put a single on there. So the lead is global supply chain pressures. You can see it picked up last June. Okay, last summertime it picked up and it had been rising all the way till about December. And then once it peaked, in purple, once it peaked, then the market rallied tremendously. Remember, we talked about the Santa Claus rally. We talked about this multiple times. And I said, hey, we might get a pullback in March. Didn't happen. Now we're in April. I think this is the time, but not because inflation so much. That's part of the recipe, but also because of tax selling. I think it's tax selling also. So we're going back to, coming back to inflation, bringing it back. I'm sorry. I know I'm talking quick. Bringing it back. Let me slow down a little bit. I've been criticized for talking too fast. Global supply chain pressures are leading indicators to inflation. Okay? This is the global supply chain. They've been actually easing since January, since December. And you can see that prices, which are lagging this lead, okay, producer prices peaked in about January and they came down sharply. They spiked because of the Red Sea conflict and then now they're coming down. So CPI is going to be your last lag. So when we look at all of them, supply chain pressures, shipping rates, ISM prices, and ISM is we're looking here at service prices, right? Non-manufacturing prices, 70% of the US economy, they're all starting to fall, but CPI is rising. Well, if CPI lags, then that tells you CPI is actually chasing these other measurements, and these other measurements are pointing lower. So I believe at some point, let me see, we're in April. And look, March in the US is spring break. So people they traveled, right? They spent a lot. I think April and May are going to be slow months period. I think consumption comes down. Another factor to consumption coming down is gasoline prices are spiking again. I mean, I'm over here in Phoenix and gas jumped from 390 up to 445. So consumption will come down just because there's nothing to do in April and May, right? You got to finish, school's almost over. You don't spend much. The summer is going to be the next rally or the next I think burst of consumption and spending. But I think April, it makes sense. April and May are slower. Okay. And also these forward looking inflation indicators will start to come into play in the CPI, and the CPI will slow down unless we get another geopolitical conflict. Okay, then we're going to be in trouble. Other than that, it looks like we are slowing down. Now the next issue here is oil prices. They are about to break out. Oil looks like it is going to break out. Okay, I'll put oil over here. Now we're going to get to oil. Sorry, I got to change this for the TikTok group. So oil is about to break out. Now keep in mind the seasonal peak for oil, right? For travel is the summertime. So markets are forward looking also. Markets are going to look forward. Now, I'm always worried about this because it brings rates up and it brings the dollar up to some degree. Maybe not because they're actually inversely correlated, but you got to keep in mind if oil spikes, it's not a good deal. What it'll do is it'll raise bond rates, and then things slow down. So that's not going to be good if oil spikes because it would cause a recession. If it slowly breaks out, if it slowly goes higher, then what's going to happen is gasoline prices go up, financial conditions tighten, you have to pay more for gasoline, for travel, so that removes some of your disposable income. That means you're not going to spend in other areas, right? Maybe not you, but for most of the economy, people have to spend an extra 30% on prices for traveling to work or whatever. They're going to have to pull that from some other source of spending. And in that case, actually growth doesn't go higher, it stays stagnant, or it slows down a little bit. And if you factor that in with April and May being slower, I really think inflation is done. I think this was the last spike. I could be wrong if there's a geopolitical conflict, but oil prices should peak sometime this summer. Okay. And traders and markets typically front run that. So I think the peak of oil is somewhere in the summer. It could even be before the summer. We could be seeing the run up into that. I'm not sure. Either way, the seasonal peak is there. The second half is looking very strong because ISM is reaccelerating, durable goods are reaccelerating, retail sales are reaccelerating, liquidity is reaccelerating, profit margins are reaccelerating. Everything else is growing. Okay. And that's why we kind of have inflation higher. But I still think forward looking productivity comes in, labor costs continue to fall or decrease, and AI comes in, right? A lot of technology creates more disinflation. Now, maybe that takes a little longer than we think, but I still think the Fed keeps saying, "Hey, we're going to cut rates." Why are they going to cut rates? Why does Powell keep saying we're going to cut rates sometime this summer, sooner than you think? Because there could be brewing a banking crisis. Maybe not a crisis, but there could be some commercial real estate issues, you know, on hand. So oil going higher doesn't just mean inflation goes up. I think it does push inflation up a little bit because transportation, but remember that's going to also steal from consumption. Okay, that's going to take what people don't just have unlimited money. They're going to have to pay for whatever. Now, let's say we don't break out of this trend. Let's say it actually eases and we break down sometime. Maybe OPEC increases production. I really doubt it at this point. Then financial conditions ease, the market goes higher. It's really hard to see a bear market. It's really hard, to factor that out. It really looks to me like things are reaccelerating, growth is picking up, and you're looking at disinflation. Well, today didn't show us that, but ISM prices show us this could be, the high print over the next 3 months. That's possibly what could happen. I'll give it a 70% probability. We'll continue to see as the numbers come in. So we didn't get to the macro forces yet, but that's kind of what we're looking at. Before we move on, I'm gonna go ahead and hit those comments. The market is already taking into account potential political results. They work a year and ahead, 100% market cycles. Yeah. Yeah. I think that, a lot of the negativity, a lot of the fears, I think are already factored into the market. It's smarter than us. We don't have a lot of people think their crystal ball is like nobody knows what they're thinking. Yeah. The market does see geopolitical risk. The market does see CPI up and it does see oil prices rising. But what you're missing here, if you're so bearish, is productivity is picking up. Productivity absorbs inflation. You're missing that. You're missing earnings and profit margins rising ahead of that. Okay. Now, that doesn't mean every stock goes up. You have to be a stock picker, right? Energy looks pretty good. We're going to go over that. Energy, whatever else it is. I still think crypto outruns everything else over the next 12 months. But if you want to hedge, yes, energy might be that hedge for now. We'll see how that plays out. Okay, let me jump over here to TikTok before we get to the macro forces. I'm going to throw on because so we're looking at oil here. Okay, if oil spikes, not no good, but if it climbs higher, it's going to tighten financial conditions. The Fed probably still cuts. Also, because baby boomers or people with lots of cash, they're yielding 5%. They just keep spending. If the Fed cuts the Fed funds rate, they're going to cut the earned income on those rich people, whatever you want to call them, the wealthy. They're going to cut their earned income and possibly slow inflation. Now, you say you are told lower rates means reacceleration of inflation. Not exactly. Not exactly. Okay, because um lower rates could actually, if that money, if the free money, if the liquidity picks up and it goes towards productivity, it goes towards creating more things, actually inflation doesn't go up. Okay, because there's more things and less people spending. So I think it's a little more complicated than, a lot of people scream on Twitter or on social media. Things look very well in my view. The worst case scenario here is that we have another geopolitical spike, shipping prices spike, supply chains break down. That would be the real issue here. Have you heard of OB Coin? No, I haven't. Auto insurance wasn't a thing till now. Yeah, auto insurance is terrible. Auto insurance, I had to switch my auto insurance. It was just too crazy. I don't drive much, so I had to switch it. Auto insurance is bad. And yeah, a lot of insurance stocks might do pretty good. Energy sector is rising a lot. Energy sector is rising. Let's take a look at the macro forces. They are tightening. We did say, hey, if we should have a correction here. If and we're getting that correction. If we do slip tomorrow under 512 for the S&P, then what is the next level? I don't really know. I can't really tell you what the next level is. Let's draw anchored VWAP. Let's see where the anchored VWAP tells us where that next level is. Really quick for those who are wondering. All right, let's put our anchor VWAP. Let's put it on this last pullback. Okay. Yeah, I mean it's a relative level. Let's say we come back to 508. I don't know. I'll throw some levels out there, but we are breaking that uptrend and we could be moving sideways for April, May. Ooh, that happens to be the Bitcoin halving. So I really think going into the summertime, I think we're gonna have another blow off top to the upside. The melt is over. I think the melt is over. The melt up is moving sideways now. So I think our melt up is over. Healthy. Remember, I said pray for a pullback because underlying growth is reaccelerating. The underlying bull market is still reaccelerating. All right, before I lose myself here, the dollar. The dollar's doing what? It is blowing up. It is causing more restriction to the economy or to the global economy because when the dollar moves up, this is the cost of global trade, right? Other countries have to pay more to import any kind of dollar or to export to the USA. Um, they have to pay more. It's cheaper for us, but they have to pay more. So this actually kind of, I don't want to say it's good or bad. It's good for the US economy, but for markets, it's a tightening mechanism. But that doesn't mean markets can't grind higher as long as the dollar slowly climbs up. Okay, it's still restrictive, but it slowly climbs up. If it spikes, no good. We don't want to see a spiking dollar, kind of like this, right? That was a nasty spike. And now we have stock market, equity market slowing down, but a trickle higher is not terrible. It's still restrictive. So until it rolls over, we have some headwinds to risk assets, some headwinds to crypto, some headwinds to tech stocks, stocks in general. Probably not energy because energy is actually benefiting from the higher oil prices, obviously. So 10-year rates are starting to tighten now. I got a slide for this. 10-year rates just blew up. Okay, again. So this is another factor. Remember, this is why we talk about these free market forces, macro forces, free market forces, whatever you want to call them. They are forces that are giving us signals to slow down or to speed up in general, right? And this is more restriction. So now we got the dollar moving higher, we got rates moving higher, we have oil moving higher, and we have the S&P rolling over because that is restrictive. Okay, does it make sense? Got it. That's what my whole point was to making these videos is the macro forces are telling us something, and now we're in this tightening mode. Now, this is an opportunity to my view. It's an opportunity because as soon as inflation starts to roll over again, markets are going to explode. When is that? I don't know. I don't have a crystal ball, but ISM prices, right? Global supply chain pressures. What else is it? ISM, supply chain prices are falling. That tells me forward looking, we're actually going to slow down. And if gas and oil continue, actually, gas is not high. It's mostly, and I mean, nat gas is not that much, is not high. Oil is going to slow down the economy, which will have, which will send rates lower. So it's weird. It's like, it's like you're playing, it's like you're juggling all these, different factors, and one factor goes negative, but also becomes a positive. So something positive becomes a negative. The economy reaccelerates, inflation goes up a little bit, the markets slow down, growth slows down. Oh, markets go higher again because rates came down. It's weird, but guess what? I think we're in a bull market. Um, because the business cycle is still picking up. All right, no, that was confusing there. All right, so VIX, where's the VIX at? VIX isn't really doing much. I think it did what it had to do. We'll see how bad PPI is going forward. Now let's look at some commodities really quick. Nat gas. This is why I'm not so sure inflation is really going to be reaccelerating again. Natural gas is still very, very low, getting destroyed. Nat gas is not rising. Okay, not worried about it. Now copper broke out. We said, hey, copper looks to be breaking out. Okay, that is a copper's in a secular trend, right? Secular trend, more copper for technology, whatever. You're going to need more copper. So yeah, copper's breaking out. Okay, that tightens conditions a little bit. So get long commodities if you're a commodity trader. I am not. I just watch the price of copper. The price of lumber, it's been going up since April. It's kind of flat. I mean, it's up. It's not crazy. It's not shooting up. How about wheat? Oh, food prices are down. Yeah, wheat prices are not climbing. Wheat prices are low, just like natural gas. Not too worried about it. So in general, commodities are not really reaccelerating that fast. It's mostly copper, and if you want to play oil, okay, gold breaking out. Are we at all-time highs finally for oil? I mean, for gold, possibly. But gold isn't driven by the economy. Gold is driven by money policies. And gold is saying the Fed's going to cut rates and reaccelerate the money printer. This is a hedge to monetary inflation. So Bitcoin and gold probably go higher. I think they do go higher for sure. Um, that's what I see going forward. All right, we'll go over some individual stocks there. If you have questions, throw them in there. Yeah, what up, Tyrese Abdul? How you doing? I'm doing good. What stock are you looking for? I'm gonna go over the stocks. Energy stocks rising. Great info. What chart is this? I probably missed it, man. I'm not looking at all the comments. I just wanted to get some stuff out there. Now I'll start looking at the comments. Go ahead and throw them in there. I'm gonna look at a couple stocks that I look at. Tesla to me is getting ready to explode, and I know I've been saying that forever. It's like, dude, this dude says this every time. Um, but the signals are getting stronger. We're seeing very bullish divergence here, right? The RSI is climbing. So buying pressure is picking up, or selling pressure is dissipating or falling off. And price has been falling. This is called class A bullish divergence for Tesla anyway. Class A bullish divergence. Where is my brush? Okay. You have price falling. And then at that same period, dude, get out of my way. What is that thing? Okay, I'll just do this. You have price falling and you have the buying pressure picking up. Now it's starting to go flat. So price is sideways and buying pressure is picking up. So we got class B bullish divergence converting or transferring into class. Did I say class A? Class A transferring to class B. It just means this is really strong bullish divergence. This is strong, but not as strong as this. And we're getting ready to break out. We could not break this trend though. We didn't break the trend yet. I think we need to get above 180 and maybe hold 180 somewhere around here. Looks like we're forming a double bottom though for Tesla. Oh, missed some of you guys. You move that forward. There we go. All right. So it looks like we're forming a double bottom, but we do have some bullish divergence. And this is why you go to the I bought Tesla 2x leverage long ETF. Dang. That's why you go to YouTube, because sometimes, I'm not looking at both of them. I'm not looking at TikTok. Anyways, yeah, I like Tesla. Tesla's looking solid here. The narrative's coming into place. Now, one possibility we could see is Elon announced robo taxi unveil. Now, you either have the market sell off all the way to the unveil, or you have it move up into the unveil. That's how Tesla moves. I think we break out. Technically, we're due for a breakout. And I don't know how high we go, but we could, move higher until August. August 8th is when he unveils. And typically for Tesla stock and Elon's comments, it runs up into the event and then sells off. So I'm guessing we run up and then we sell off August 8th, because there's no way those robo taxis are ready yet. But the market can, definitely the shorts can give up a little bit, and we'll see if China starts to reaccelerate. Either way, so you got that Doifer, you got Tesla 2x leverage long ETF. I think Tesla's almost due for a breakout. Okay, that's what I'm looking at. Almost due for a breakout. We'll see. It's getting close. There's a lot of options activity that's starting to pick up, and I'm pretty sure they're not getting bearish. And I know inflation, yes, inflation. Now imagine when we see inflation dip lower. So maybe this is going to be the next print. That's going to get closer to rate cuts. So those rate cuts that got pushed out to July could easily come back to June, and then Tesla breaks out. Okay, because Tesla margins would be you would be projecting that Tesla margins are going to start rising. So either way, I'm looking at Tesla. I can do a little more technicals on that, but I want to move on. All right, let me just scroll down. I'm missing so many people here. Get your cash ready. Going down 55K or below having yeah, Bitcoin. Now look at Bitcoin, crypto in general. You guys already know I'm a Chainlink fan. Bitcoin is just accumulating here. I thought it was going to break down a lot further, and it could, but the halvening is coming up. I think it's priced in. Either way, the setup is really good because the setup is good for the summer. I think we're going to have a real strong acceleration during the summertime, and price action is holding up. We've never had the last cycle, we did not have price at all time highs before the halvening. Okay, we are at all time highs before the halvening. I think the last cycle we were at 10K when that halvening happened. We're about 10K. All time high was 20. Now we're at all time highs before the halvening. This just is very bullish for Bitcoin. There's a lot more demand than there is supply, and that supply is going to get cut in half. Maybe nothing happens after a couple months, but I think crypto's due to reaccelerate. And in my view, this is the this is going to be the most explosive cycle from all the stock market, right? Nvidia chips, they have their cycle. Microsoft, Apple, they're not going to move that much. Tesla could. What else could? Some other small semiconductors could. Small caps can move tremendously, but I think crypto is an easy, macro cycle play here. Everything is pretty much setting up. Have you heard of Obicoin? No, I haven't. All right, let's see if I can catch up to these comments. What are we talking about? I'm probably far behind on your comment. Just go ahead and re-comment if you had a comment, because I can't catch up with this. I talk too much. Yeah, so Bitcoin's looking like it wants to break out. It could break down a little bit, but look, the fact that price is holding up is a good sign. This is a really strong sign. We move over to Ethereum. Ethereum still hasn't made its move. I think Ethereum does outpace Bitcoin in this cycle for sure. That's what I think. Have your thoughts? I'm most bullish on Chainlink. Chainlink is slowly climbing this ladder, and I see. I've been watching this pattern. It makes a new low, makes a higher low, then it breaks out. Makes a new low here, makes a higher low, breaks out. Makes a new low, makes a higher low. Well, we'll see if this is the higher low, and then we're getting close to breaking out. We're holding this trend, so I like Chainlink. Obviously, it is the it's hard to explain to beginners, but that's my bet. Okay, that is my bet. Solana looks good. Crypto in general is reaccelerating. Solana looks like it is holding that level pretty well. And then I'm gonna move over to what I see in the stock market. Those are the only three I'm really kind of. Oh, I like Aave too. Aave is trending higher. Aave looks really good. Definitely reversing here. So let's just draw that trend. Look at Aave is trending up. Aave looks pretty good. This is decentralized lending. There's a clear reversal. Bottomed out, starting to climb. I don't think anything outruns crypto in this cycle. I just don't think so. I don't think so. I know it seems risky to a lot of people, but this is a mega trend. Blockchain technology is a mega trend, like AI, kind of like energy storage, robotics. It is a mega trend, and it's on its way to launching in this business cycle. That's my view. Do I trade options much? I'm not trading too many options. Yeah, I might throw some Tesla options on, but that is not financial advice. You all in on Chainlink, or is there something else you like? Well, Bukowski, our small cap blew up that we were invested in. I'm up 300%. I didn't really want to brag about it, like, oh, look at my small cap. But since you asked, where is it? Cooler Technology. They got a lot of contracts. We've been looking at this. The market cap got all the way down to 20 million, and it exploded. Now, this was a small position, but it's up 300%. I took half profits on it. Okay, my average price is about 19 cents, right about here. Okay, this is my average price. So today it was up 325%. I'm out about half of it. It's up a lot. I really wish I have I can't say certain words. I hope I can hold till it really blows up. It's only at 100 million market cap. So this is a small cap that I was betting on. Made a big move. Shout out to Dimaj out there. He's up also 300%. I think he had more shares than me. That dude's up a lot. So this was the other bet I had other than the crypto. And then obviously I have some Tesla. I have a little bit of Tesla, but I'm trading Tesla more. So I am pretty much irresponsibly long. Um, I'm pretty much irresponsibly long in crypto. Yeah, I've seen the cycles. I don't think anything else is going to outperform crypto. And I think we're still mid cycle, if not early cycle, for maybe mid cycle. Maybe we could say mid cycle. And it really depends on, how the money cycle goes, how fiscal policy plays out, and geopolitical risk. Either way, I'm very long crypto. I saw that. Okay, you saw it. Cool, cool. All right, enough of that. Nobody, this is not financial advice. Do not chase this whatsoever. Don't do it. Let's go to some of the what I have in here. In play. I think the in play stocks I was looking at. Look, AMD is pulling back. AMD is showing some really good support. Now be careful. AMD can definitely dip on you because Intel's coming out with chips that are cheaper than Nvidia. So I think the prices of chips might be coming down. I'd be careful. I'd be more interested in AMD if it can come down to this uptrend that has been forming for a while. Okay, if it can come down. Now, does it get there? I don't know. Definitely not if CPI comes in lower. But for now, appreciate it, Bukowski. You doing FOMC minutes? I saw the FOMC minutes come out, Veronica. I don't think nothing really changed. I thought they were today. Weren't the FOMC minutes today? Am I mistaken? I think they came out today, and I listened to a little. I looked at some of it. Nothing really changed. Nothing really changed, or maybe I'm just being lazy. I didn't really see no big change in FOMC minutes. But tell me if I'm wrong. Let me know. I think it was today. Pretty sure. And I looked. I was like, this is insignificant. They're saying the same thing at this point. It's just data dependence. What we're looking at here. So yeah, AMD. But if AMD does happen to hold this level, okay, if AMD does happen to hold 160, let's call it 160. If it gets below 160, you should not be in this trade. You should not be holding this unless you're like a long-term holder. But if you're trying to, catch a swing trade, AMD under 160 is probably going to get crushed. More than likely, it's going to get crushed. So I like 160 for AMD if it can hold, show some bullish divergence or show some bullish price action, then AMD looks pretty well. Okay, Tesla, obviously, bullish divergence also holding up here. Elon, your catalyst here is robo taxi, the unveil, whatever that means. He's probably just going to say, this is our plan, right? Nothing really changes, but it could be a catalyst to launch out of this downtrend. Tesla goes higher. Nvidia setting up. Also, Nvidia is just ridiculously strong. I don't think I'm going to trade Nvidia because I missed it and I'm bitter about that. I'm bitter about missing Nvidia, so I don't want to trade it. I don't want to chase it unless it gets destroyed. So yeah, I'm gonna take some other trades, but yeah, Nvidia is kind of curling up here. The RSI is down, might have a little more further to consolidate, but if it does break this, this downtrend, I'd be long Nvidia if I like Nvidia, but I don't. All right. Robin Hood, right? Digital wallets, financial technology. I really like Robin Hood's actual business model. They have Roths, they have traditional IRAs. I can't even say it. They have Roths, you have traditional, you have a cashback credit card that's coming gold. It's 3% cashback on every purchase. You have brokerage, you get crypto. This is becoming a super technology, in my view, a platform, an app, super app for finance. So I like Robinhood, and it's really moving with the crypto cycle. So just keep that in mind. This is pretty much a crypto cycle stock. And if rates come down, it's going to explode because that means margin borrowing goes down. I think margin borrowing right now is like what, 12%? No, 7%. So if you borrow on margin, you're paying 7%. If it goes down to like 3, yeah, you won't be getting that cash back on your money market funds, but you can take more leverage, which is dangerous for most people. I do not advocate you even do that. But people will do it anyway. So Robinhood looks okay. Okta, I want to wait till this comes down here. This is a cybersecurity play, and we'll see. I'm waiting for it to come down here. I don't think it's ready yet. But this looks good. This is a cloud computing play, Wisdom Tree Cloud. I don't even know, I'm not really I don't really understand fully what they do, but if we are looking at cloud moving higher, it is forming a nice wedge. Okay, nice little wedge here, break above this wedge, and a reacceleration in the cloud, the cloud names or tech in general should bring this higher. Okay, you want to do MedP, Sorry, I missed a bunch of you guys that started talking again. Do you swing trade? Yeah, I'll swing trade if I need to. I will swing trade. Right now, I'm creating content, macro content, so that you can track the money cycles, right? The cycle of money, macro, the ISM, the business cycle. I'm creating content right now. I will get back into trading in the future, but I want to make sure that I give as much education as possible, everything I know in an easy to way, understandable, digestible way. There's all kinds of macro out there, bunch of complicated terms. This is going to be simple. I'm trying to make it as simple as possible. And I don't want to rush it because I'm not here to try to make, a bunch of money. I can make money in the market. Yes, I'm going to make money on it. I'm going to sell it for sure. But I want to make sure it's good content. I don't want to rush it. I don't want to scam nobody. And I would hate to be scammed. I've read so much information that is bullcrap, so much information that is hard to understand and is confusing. I want to make this easy to read, easy to understand, simplified with charts, with historical data and all that. So that's what I'm working on right now, not swing trading. Although I might swing trade Tesla. I might swing trade Tesla. Okay, let's keep going here. Think Gala will reach all-time highs. I don't know what Gala is. What is Gala? A plus setup. Savage man. What up? BA thoughts. Okay, BA. We'll go to BA. Let me just finish this. I'm gonna go to BA. Ask me again in the chat. CRM. Okay, CRM is basically another tech play. I can't even think of what they do exactly. Salesforce. It's kind of like supply chain. Okay, I'm not going to go into it. I can't remember. CRM is a strong stock though. Okay, I like it. It's moving higher. It's starting to wedge, having this descending wedge. Is it cloud? Is it a cloud? What is CRM? Salesforce. It's like a software. It's like a software to increase productivity, basically, right? For businesses. Um, and yeah, I like this. It's almost at all-time highs. Once it breaks out, I think it's going to be nice. So look for that breakout above 310. I think 310 is an easy level to recognize. The real breakout probably isn't until about 320, but 310 is where you might want to get excited. 310 for that. Now, teams, I've been watching this. I think I posted this. This thing has been in an uptrend. So this is another cloud play, very complicated to explain what they do, but it has reverse course. Okay, this thing has been a savage going higher. It did had that pullback. It's broken the downtrend and it's been trending. And finally, we get a retest of that trend. Very clean, very, very clean on the retest. If we turn on the 9 and 21 EMAs, they're starting to curl higher. Okay, they are starting to curl up. And I like this. I like this play. It's on the trend. Um, looks like a reverse cup and handle. You see those EMAs starting to pick up. Also, we're above the 50-day moving average. Oh no, I guess we're not. Okay, we're not. We're above the weekly. My bad. We're above the weekly moving average. So not only were we supporting the trend, but we did support that 50-day or 50-week moving average. So I like this. I like this as a swing trade. If this is a swing, I like this. I have like one share because I'm not ready yet. After that CPI report, I kind of want to see what how the market digests things, but I'm keeping my eye on Team, Atlassian Team, software. It's another software cloud productivity infrastructure play. So look at that. Look at that uptrend. It looks nice. It looks beautiful. I like it. PayPal. Okay. PayPal finally getting some momentum. I know a lot of people are trying to trade it. PayPal is not only breaking the downtrend. Okay. It's breaking the downtrend. Now it had this false breakout. Everybody got caught off on that, but it did support the trend and came right back up. So PayPal looks good. Looks like it's kind of showing a reverse head and shoulders here. Let's draw it out. Reverse head and shoulders. Come on, come on, come on. All right, so here's your shoulder, here's your head, and then here's your next shoulder, and it's breaking the downtrend, and it's consolidating at this level, and it's supporting the EMAs. Is it? Are we on the weekly? Yeah, oh yeah, yeah. This is also the first time that it's gotten above. Look, this is another signal. First time it's gotten above this green 50-day moving average. Okay, it got hit before. Now it's consolidating above that, and we're getting a golden cross. I cannot talk. Golden cross like consolidation here. And so the golden cross is what is this blue line? Is this the 100 moving average? Either way, it's moving. Oh no, this is the 10. My bad. The 10-day is blue. The 10-day weekly moving average is starting to cross, and I don't think we've seen this at all. Starting to cross above the 50-day. So another momentum signal. I think this is a momentum reversal. I think we're getting a momentum reversal on PayPal. This is not financial advice. I'm not saying go buy PayPal. Keep your eye on it. and just keep your eye on it. We'll see how it moves out, or how it actually pulls up. Now the hedge to inflation started to break out today. If I looked at all the gas and oil stocks, I think CVS, Chevron looks the best. Best technicals in my view. Okay, Chevron starting to reaccelerate. Yes, oil's up. Also, they have earnings. They have a lot of cash on the balance sheet. So if you're going to hedge inflation, or at least energy inflation, I really like Chevron. It is starting to break out of this descending pattern. And I don't know if I'll actually take this trade. I'm not really too interested in hedging here. I mean, if I had a different type of portfolio, I probably would. Maybe I do take the trade. I might take a call option into the summer. I don't know, because the summer is probably peak. Might do it, but yeah. If you wanted a hedge, there's a hedge for you. All right, now I'll go to your BA. All right, BA, let's go. BA, ooh, looks like trash. I'm gonna tell you right now, broke the downtrend, don't like it, and it's making new lows. Okay, caca. Nah, I don't like that. Heck no. I wouldn't buy. Maybe short it. Shoot, you might be able to short Boeing, especially with inflation coming down with the market correcting. But nah, no, not long. Definitely not. Oh, you have puts. Oh, nice. You have puts. Okay. Wait for the retest. My bad. I thought you were going long. Yeah, wait for the retest. Let's say the retest is somewhere around here. Okay. I would say if it comes and retest about 180, I mean, you can get short off 180. Not financial advice. You can get short off 180 if you short Boeing. I'm definitely not doing this, but that's what I would do if I was going to short. KNSL, KNSL, KNSL. I have no clue what this is. If you're gonna give me a ticker, tell me what they do. I mean, it's in a strong uptrend. Holy smokes, what is this? Uh, I don't know what this is. Something capital, but yeah, it's in a strong uptrend. If you're looking for some support, look at the 50-day weekly moving average, somewhere around 399, 400. Maybe the support at 400. That's where I would target in. You want to get a nice hold at 400. And there's a little bit of consolidation here. So yeah, if that's what you're looking at, KNSL, no clue what it is, but check that. My guess is it is some type of financial bank, something, right? MedP. MedP. What is this? MedPace Holdings. Who are these names? I don't know if there's so many stocks. No clue what this is. Same thing. Don't chase, wait for the pullback. If you don't get it, it's not worth it. There's a lot of other better plays out there. But again, I don't know what the theme is. I don't know what they do. So maybe there's some catalyst I don't know about, but wait for that thing to pull back into the 50-day. All right, we might be getting a correction. Now, my whole thing is the fact that we're getting this correction. This is the prayer, right? I said pray for a pullback, multiple pray for a pullback. Here comes the pullback. I think so. Okay, I think so. I think it's going to be tax loss, not tax loss harvesting. I think it's going to be a lot of people made a lot of money in stocks, a lot of earned income, a lot of fixed income, dividends, whatever it is, and they have to pay taxes on it, and they're going to sell to pay off those taxes, right? And they won't have to worry about that tax sell until next year. So they got a whole 12 months. And I think we're going to get that correction here in the next week, right? Next week could be next week. Yeah, BA look at 180 short. Netflix, Tesla long. I like Tesla long. I like Tesla long. Well, it looks like a lot of people want to look at Tesla. I'll go back to Tesla in a second. Would you say SPY? Look, SPY real quick. SPY is real easy. It is. I'm looking at the anchored VWAP. SPY has broken that downtrend. Maybe we get let's go to the daily. Okay, S&P, I'm looking somewhere around this 50-day moving average. Okay, we haven't even touched it yet. So, and that comes right, that's meeting right with the 50-day, or right with the anchored VWAP from this correction down here. Okay, this is anchored VWAP. This is volume weighted average. Okay, so I'm thinking somewhere around 508 for a SPY. 508. It could be more treacherous, but from what I'm looking at, margin debt is going up. People are leveraging in, and they really want to buy these dips because profit margins are rising. There's three things that move stocks: the flow of money, earnings, and dang, what's the other one? Fiscal policy. Fiscal policy. Yeah, fiscal policy, pretty much. I mean, that's part of the flow of money. Well, I would say this: the flow of money, and that is set to reaccelerate here unless inflation, starts to really ramp up. UNH. Oh, I like UNH because that's also a fixed income type product where what I heard is they're reinvesting. I know I'm jumping all over the place. They're reinvesting into bonds. A lot of what are the premiums that they're getting? They're reinvesting into bonds, which is very interesting. Anyways, the whole point is earnings are rising. Okay, earnings are rising, profit margins are going up. Uh, and then the macro forces are definitely not in favor right now. Once those turn around, then we get another tailwind. But oil is too high, dollars up, rates are up. Those are not in favor of stocks or risk assets. But when they turn, that's going to be, the signal. That's going to be one of the signals. And also, the Fed cutting rates. I think it's going to be the summer. I think everything comes together this summer. Crypto probably outpaces everything. All right. Anyways, there's your S&P 508 is what I'm looking at for support. What up, D-Maj? Walmart, WMT. I think I saw Walmart earlier. It doesn't look bad because consumer spending is up. Um, Walmart looks like it just broke out, to be honest with you. Looks like it just had a breakout. I don't really like Walmart. It's not an investment for me. I'd never invest in Walmart. Too slow growth. If you have like $2 million, maybe, but I'm not a fan of Walmart. Now, if you're trying to trade Walmart, it's an easy trade, doesn't move too fast. And I would say this is the breakout. Your stop is under 58, 59. Yeah, 59. Yeah, if it gets under 59, it could come back and retest us and bounce. I don't really like this setup. I don't like this setup. Okay, but yeah, Walmart doesn't look bad. Let me draw an uptrend. I can see this little gap up. You might have this play out though, right? Where it just comes back to this spot. So if you get a break of trend, meaning the price gets, on this side of the trend and it's below this level 59, no good. But yeah, I don't know. I mean, that's Walmart. Let me see. It might be good. It might trend higher for a bit. It's just so slow. It's so slow. It's going to eat up theta. It's going to eat up your theta. I would be more so interested in trading either momentum options intraday or just hold a lot of shares, right? Because it moves slow. It's easy to get out if something goes wrong, but that's a good sign that it's popping on inflation. Okay, UNH, right? UNH. UNH. This might be a good hedge. Ooh, it doesn't look good though. Does not look good. It's at a bottom. Maybe not. Could be support here. We could be looking at support. Where's my tool at? Why am I getting lost? Here we go. So UNH. What are we looking at? 445. Let's go 445. Okay, 445. Let's go to that weekly chart. It looks like a low. Now, I don't listen. When it comes to these big stocks, you want to know the fundamentals because that is a strong sell off. That's a strong sell pattern. It's probably oversold too, huh? Not yet. I don't know what's going on here, so I wouldn't recommend it. I like my catalyst aligned. I want to see a technical catalyst. I want to see a fundamental catalyst, and I want to see a macro catalyst. The macro catalysts are not hitting yet. They are there for the next 3 to 6 months, but not over the next 2 months. I think it's kind of weak, kind of bearish. Fundamentally, have no clue. Okay, have no clue fundamentally. And technically, boy, this thing is falling like a knife. So yeah, if it has a bounce around 440, 445. If it gets below that, right? I mean, you do have a little bit of support here at 435, but make sure you get some bounce. Do not buy things into the support that you see. You want to see the bounce. You want to make sure there's actually buyers there. Don't just chase it. And this is some strong selling. There might be something negative going on in the company. I don't know. Would you say okay, NQ, Netflix. Do you trade options? Sure, sure. Trade options, yeah. TSM, gold, GLD as a hedge. Yeah, gold's a good hedge. I like Bitcoin. Bitcoin's what up? What up, Bunky? Bitcoin is gold on steroids. I know it's not for everybody, but it's gold on steroids. Best returns of any other asset class. All insurance companies do that. Yeah, insurance company. Oh, okay, follow me said all insurance companies do that. Okay. Hey, I'm not an expert on insurance companies. I'm really not. But if they're all taking that and buying treasuries, it might be an okay hedge. The problem is if inflation is going to be a little higher, that means the bond market, TLT, is going to be weaker. So I'm not so sure that's the greatest play. I'd rather go with energy or industrials. I'll show you what I like. Actually, I don't have it on here. I should have had DE. Let me add it. I like Deere. Okay. There's two big industrial companies that I like. One of them is Caterpillar. The other one is Deere. Caterpillar just happens to be going parabolic. Okay. I wish I would have caught it earlier. Caterpillar is going parabolic. It's about to make a new trend. It's about to get super vertical. I would not chase this though, unless I really see it come down a lot. I want to see the RSI come down. I want to see it support the 50-day or 50-week moving average. But Caterpillar is going bonkers because of all the fiscal spending. Okay. So you hear, oh, the economy is weak. Oh, political. Get your politics out of your investing. If there is trillions of dollars going into infrastructure for chips, manufacturing plants, new homes, complexes, you're going to need you're going to need some type of infrastructure to support that. Caterpillar is winning, and I think Deere is coming next. Okay. And it's been consolidating for a while. So just looking at the global, and I don't know how many contracts they have in China. I know Caterpillar does, but if this thing breaks out, I think it's going to look pretty nasty. That's my guess, just like it did back here. So yeah, if I had a hedge with a safe industrial stock, I mean, what is the beta? How far is this thing moving? 20%. I mean, it's a lot. It's a big move. 20%. Um, we'll see. I mean, I gotta dive more into the internals, but hey, Deere, keep your eye on Deere Company. I would keep my eye on Deere Company. All right, back down to the bottom. Let's see. Somebody said AMD. I like AMD for sure. TSM. Okay, TSM. TSM is TSM looks like it's trying to break out. They just had two contracts in Arizona. This is where I'm at in Phoenix. And I know the jobs aren't here yet, but they're building around that. TSM looks super strong. Look, this is going to be a monster breakout. This could be a monster breakout. You had two tests of the 140, let's call it the 140 level. 1, 2, 3 test, 3 rejections, and now it's starting to hold. So above 140, this thing can really take off. There's a lot of momentum starting to pick up on this vehicle, this investment vehicle of chips. I'd be long TSM. I'd be definitely be long TSM. Now, how you go about it, your business, not mine. I'm not here to show you how to do it. Oh, damn it. Hold on. Okay, I almost said I wasn't there. So yeah, TSM, I like TSM. This is a good one. Listen, the semiconductor chips narrative is not over yet. This is not a bubble. Okay? It is not a bubble. The bubble hasn't even I guess you could say the bubble did kind of start, but usually bubbles last for a couple of years. They're not just like one season. Um I don't if we do get a bubble, I think it pops in 2025, maybe late 2025, early 2026. Not financial advice, but when I look at the macro cycles, ISM is barely turning up. And this is one of the companies who benefits from a turning up ISM, a manufacturing index reaccelerating, which means profit margins are going to reaccelerate. So I like TSM for sure. The hold of 140 is key. Okay. Maybe it's down here. Maybe it's 133, right? But this is a secular trend. This is a mega trend. And yeah, this is a mega trend. So I like TSM for sure. I don't know if I have any other. Let me see. Let me check out the. Yeah, this thing is moving up. I want to see more consolidation. I would like to see more consolidation, but TSM is definitely a good one. This is TSM and AMD are two that I think have legs here. Of course, other stocks have legs, but they have a real narrative behind them. They have fiscal dominance behind them. They have fiscal spending. Who's fiscal? Government authorities, legislation, the president. Who else is it? Congress, legislation, the U.S. Treasury. All of them are in cahoots to put a bunch of money together to make sure this works out. So it's hard to bet against AMD and TSM. It really is. All right. See what else we got here. Oh, Cooler. Yeah, of course, Cooler. How did you know about Cooler? Yeah, Cooler. I mean, Cooler is exploding. Now, I wouldn't chase it. But Cooler Technology just had a bunch of contracts with the army, with different EV companies to build battery services. They do battery services. They're part of the electrification of the future, even in space. So I am long this. I don't want to disclose how long I am, but I'm up 300%. We've talked about this before, and it finally blew up, and it hasn't even had earnings yet. I don't know what's going to happen during earnings. I really don't. So I did shave some off, but I want to hold this at least until 2025, until we get more stimulus. I want to hold it. But yeah, Cooler Technology is a monster. I would not chase it. On the fib retracement, okay, that makes sense. Yeah, on the fib I might add to it if my chain link goes up enough. We'll see. But I'm definitely heavily weighted on chain link. Okay, heavily weighted on Chainlink. And now we have revenue. We can track Chainlink's revenue through a website called Dune, Dune. You can track their revenue. My guess is as the revenue accelerates, Chainlink's going to start really bidding up like it did in the last cycle. You're only 60% up, but it looks great. Yeah, it looks pretty good. All right, let's see. RCAP popped on my radar today. They make drones. Okay. Leverage ETFs for day trading, AMD, INTC. Didn't INTC dump? I think it dumped. Yeah, it did dump a little bit. We'll see. We'll see how it goes. I don't know too much about Intel. I've never liked Intel as a swing trade, maybe a day trade. It's an easy mover, but definitely not a swing trade for me. Get some USDT, ENA, USDT. Why USDT? Oh, you mean undo USDT, DT. That is too many numbers for me. Oh, KuCoin? No, I'm just kidding. That's probably the. Yeah, I don't know what this is. Looks like it's going straight up. When did this start? February 20, January? 3,000%. What a monster. I don't know what it is. I don't chase things I don't know, especially when they're up this much. But hey, if you're in it, congratulations. You're killing it. You're killing it. So keep it up. Um PGR, whatever, Renard Whitfield. PGR. Oops. Oh, wrong thing. PGR. Oh, is this Progressive Insurance? Oh, you know what? Good call. Good call. This might be another hedge to inflation, Progressive Insurance. I don't know why I should have, I'm gonna add this to the hedges. Good call there. I just haven't looked into it too much, but Progressive, what do you got? Allstate, Progressive. I don't know who the best hedges are. Again, I'm long crypto, but they could be, okay hedges. They could be pretty good okay hedges. Progressive. I don't know who else. All right, any questions? What do you got? IWM ETF is good. I like IWM too if they cut rates. I like IWM. You guys got any questions before we take off? Throw me with the questions. Don't forget to subscribe to the newsletter. It's free for now. Still waiting for that macro content's coming out. All right, I got the business cycle stuff in there. I think this week I might do you know, another investment thesis, kind of the mega trend. The mega trend I'm looking at. When I say mega trend, I'm saying the cyclical the cyclicals of the market, the cyclical financial capital markets. Okay, let me rephrase this. The cyclicality of the economy and the cyclicality of financial funding is starting to turn up. So the biggest winners out of the cycle turning up is a mega trend. What is a mega trend? Artificial intelligence, something with disruptive innovation, artificial intelligence, blockchain technology, robotics, what is it? Surgical and something surgical. I don't know. I haven't really looked into it. Some people are exposed to it. Um, so yeah, blockchain technology, robotics, energy storage. Look, Tesla's next earning call. I'm gonna go to Tesla next. Tesla's next earnings call. Their revenue on energy is gonna be revving up. Okay, so let's stop with this. This is the trade I'm looking at. Just to be clear, this is what I'm looking at. I'm looking at Tesla. It's showing some bullish divergence here. I think we need to get out of this small little this area right here. We need to hold this area. What is this above 180? Tesla's may be one of the hardest things to trade in the market. Okay. But I am looking at call options January 2025, not financial advice. Okay. But that's just how I trade. If I do, I'm going to pay a little more for time because when it moves, it moves. And I don't want to get out on a little bump, right? Maybe I take off one contract, but I want to see this thing fly. So, and I took some profits from Cooler up 300%. So I get a risk-free trade, right? I'm going to get a risk-free trade here. Um, but definitely want to see it get above 180. And let's throw on that momentum. Let's see where the okay, let's take this off. I want to see it get above 180. And it's really tough. It could just, slam down again. But I think a lot of the negative sentiment is already priced in. And I mean, my biggest edge on this bullish divergence here. RSI is picking up, buying power is picking up, option activity is picking up, and it's only a matter of time. And we could be running up into the robo taxi reveal. I am not holding past that if we blow up because usually Tesla sells off. So that's what I'm looking at. Yeah, falling wedge, very bullish. Spot on regarding Tesla. Thank you. Appreciate it. Right now, I'm what up, Bunky, Bunky, Bunky. Right now, I'm materials, energy heavy, looking to add on tech in the correction. Okay. Hey, I hope you guys make money. SMCI, that's a good one. Thoughts on CVS? I looked at CVS early. I didn't really like it. I like Tesla. Okay, I'll look at SMCI real quick because it looks like it's about to blow over. It looks like it's going to roll over. This looks like bearish divergence. I would not be long SMCI. We could be near, like, I'm not an expert on chips. We could be near the chip cycle. And what that means is prices, there's enough chips out there to where the supply, when supply and demand, when supply increases to a certain level, then the price of chips goes down, therefore revenues or profits go down. So we might be near that. And it looks like SMCI might be rolling over. I wouldn't try to short it either because this is a crazy stock. I wouldn't try to short it. I think they're too expensive. It's so expensive to short to buy puts. If you could short shares, I'll do it, but can't do that on a Robinhood yet. That's what I'm using. LAC lithium. Look at me over here doing more. I can't say no. I can't say no. LAC lithium. This one looks pretty good. Looks like it's trying to reverse here. This does look like it's trying to reverse here. I like it. Oh, it's above. Okay, it's above the 50 for the first time in a long time. First time in a long time. I guess a little over a year. I would want to see LAC lithium. And that's a nice little wedge here, or a flat triangle, climbing triangle, ascending triangle. This is a lithium miner, right? Yeah. Momentum above this level could blow up. Again, I don't know the fundamentals, but looks good. What do you think about RIO RWA crypto play? Oh, I don't know what you mean, Biggs. Rio RWA crypto play. You talking about real world asset play? If you're talking about just real world assets in general, I'm all in on Chainlink. But if you're talking about RIO, I don't know what that means. Return on equity, is that what you're trying to say? Don't know what you're saying. Look, Chainlink, I'm all in. That's the number one crypto I'm looking at right now. Yes, Bitcoin's a monster, Ethereum's a monster, but I want to get a little more risk. Yes, ticker RIO. Oh, the ticker is RIO. Okay. I don't know what it is, so I'm not going to sit here and pretend like I know what it is. Could be great. I have no clue. Have no clue. I don't know what to say here. I hope it goes higher if you own it, but I don't have too much to say about it. On a technical basis, it's really hard to read some of these cryptos because they're so volatile. I don't know what the market cap is, but it looks pretty bull. Look, it's a crypto bull season. Okay, we're about to head into crypto summer, so everything's gonna go higher. Pretty much, if you don't go higher, something is wrong with your project. Something is wrong with your project if it doesn't go higher. That's all I got to say. But most of these plays will go higher. You just got to be careful. Just don't get scammed. Do the research. Question everything. Bitcoin halving in a few days. Yeah, we'll be here for the halving. All right, I'm done. I appreciate you guys jumping on. Don't forget to subscribe to the newsletter. Hit the likes. Help me out a little bit. Hit the likes if you can. I'd appreciate it. And stay tuned. I think I'll do something on Friday with Josh Brown. I'm just kidding, not Josh Brown. Josh Dobson. We're going to talk about the housing market. I'm not an expert in the housing market. He's going to give us some insight on the housing market, where we're at in the cycle for mortgages. What does it look like? Are prices coming down? Are they going higher? What is the housing market starting to look like? Where could you where is there an advantage? Okay, we're going to do that on Friday. And other than that, you guys stay blessed, lift weights, eat healthy, improve, read, learn something new every day. And thank you guys. Stay blessed. Stay blessed. Catch you guys next time.